From our Hong Kong studios. Derek, good to see you again. What do you make of Mr. Obama's proposals? We do see the Asian markets down quite sharply in financials. Here in Asia, down sharply. Should they be that worried?
Well, definitely the proposal is negative for sentiment, not only in the US, but also globally, because it shows that Obama's political priorities are shifting towards the social democratic side. And I'm not making a comment on whether it's good or bad in itself, but it definitely means that the economy would grow slower if policies focus on dividing the pie evenly rather than growing it. And that's a negative for global growth, for US growth, and definitely with Asia being exposed to exports to the US, we are feeling the pinch as well.
Dariusz, do we take from this that President Obama is prepared to sacrifice an element of short-term growth for this long-term structural reform that he seems determined to put through?
I think that this is a very correct conclusion. You know, when you even read the Audacity of Hope that Obama published before being elected, you can see that he's really strong on fairness and more equal wealth distribution. Usually this is matched with lower long-term growth, but he is definitely pulling in this direction. And his rhetoric also suggests that it's very ideologically driven. He keeps saying that this is because banks are making all these profits and paying all these bonuses. So he's really trying to, you know, first increase the bank costs by introducing this fee to recover TARP funds. Now he's trying to reduce banks' revenues by trying to strip them of some of their core businesses. So clearly he is trying to implement his ideological views, and he is not caring that much about long-term growth. He's caring more, it seems, of implementing his agenda and potentially scoring political points in November elections.
Dariusz, he wants to split banks up. He wants to make the financial system less risky. Many people seem to be suggesting that this would not have prevented the credit crisis from happening. Is that your view? Do you think, though, that it could perhaps have made, if these rules were in place previously, could it have made the effects of the credit crisis less severe?
Well, to some degree, yes, because had banks not been allowed to be involved in proprietary trading, during the crisis their losses might have been smaller. At least the banks that were involved, at least the bigger banks. But, you know, if you take this logic too far, you can say that maybe banks shouldn't be making any loans, because it also constitutes taking deposits of people and putting them in some risky assets, because in any case a loan can default. So I think that in this case Obama is going too far. The move is too politically driven, and that's why markets are reacting very nervously, because if political winds are blowing against the financial sector industry that has led the recovery in equity markets, then there is risk that a major correction that I thought would start in the second quarter because of double-dip fears will come sooner, already in the first quarter, on fears of overall policy direction.
Derek, it's Maura again. This is just one of several issues weighing on markets here in Asia today. Of course, another concern being China and when it might tighten its monetary policy. Is there opportunity when the markets are this nervous?
I still believe that in the short run, the markets should move higher, and that the current dip presents a buying opportunity. The risk, obviously, here is that before we move higher, nervousness may push banking stocks even further down. But in places such as Asia, which will feel only indirect impact of any US policy changes, I believe it's still time to buy for the short run. Even if China does tighten policy by increasing interest rates, it will mostly serve to boost local banks' profit margins. So this should be positive for the stock market. So I believe that, yes, there will be monetary tightening in China, increasing interest rates at the latest in March, but current levels still remain attractive for a 2 to 3 months time horizon.
All right. Thanks for joining us today. Derek Kowalczyk, Chief Investment Strategist at SJS Markets. Anna?
More here in Europe, Airbus and 7 European nations